This is Jason, Chief Technical Analyst with ToroAlerts, with your weekly market recap for the week ending January 27th. There's pretty good price action on the traditional markets for the week, and some sideways price action on the cryptocurrency asset classes. So let's dive right into the charts and take a look at what we're seeing. Starting out with the total cryptocurrency asset class, we can see that we got up above 1 trillion on the total market cap for crypto this last week. We are currently sitting just below 1 trillion as we're recording this on the 28th. And so we're kind of looking like we're hanging out at that 1 trillion level, which we've reached a couple of times in the not too distant past, both in September as well as November. And that was ultimately a level where we kind of rolled over from here. So that'll be a really key inflection point at this level to see if we can hang out at that 1 trillion level, ultimately hold this range at least to support, and then potentially head higher. If we do, I would expect probably the next level is resistance to the upside at about 1.2 to 1.25 trillion for the total cryptocurrency asset class, but there's also a decent chance that we'll potentially roll over from here and correct a bit. So if we do get that correction, the big question is going to be whether it's just a short-term healthy correction and a longer-term bullish uptrend, and then if we ultimately break up higher from there, or if we just see a complete breakdown like last time and drop all the way back down to that lower end of the levels we've been at recently, which is about 762 billion in the total cryptocurrency asset class. So we'll be keeping a close eye on that 1 trillion level and watch price action from here to see where we ultimately are heading from here. But it's definitely been a good couple of weeks for the cryptocurrency asset classes. And when we take a look at our Bitcoin chart, it looks to me like we're potentially looking at a possible top in the Bitcoin price action. We've been consolidating around this 22.5 to 24K level. I think there's a good chance we roll over and correct from here. It is possible we get maybe one more leg higher. If we do, that would probably top out at about 25K. But I think there's a decent chance we ultimately put in our top right around that 24K level. And we'll potentially see a rollover from here. As long as the correction is constructively bullish, I'd be looking for a bottom support between 18,700 and 20,700, which would be anywhere between a 0.382 to 0.618 retracement. Looks like we got a pretty clear 5 waves up on an Elliott wave pattern, and then potentially if this wave 2 corrects down to those levels and then we find support there, I think that would set us up for a potential breakout outside of this wedge, descending wedge pattern we've been in since the top of Bitcoin, and ultimately support some higher prices that could get us up to 30,000+ in Bitcoin. But I think before we get up to those levels, if we do, I think first it seems pretty likely that we'll have a shorter term correction to deal with. And so that's what I'm looking for in Bitcoin price action. If we get that support and a brief correction, I'll definitely be looking to re-enter some longs in the cryptocurrency space if we ultimately find support at those levels. And take a look at Ethereum. We're in a bit of a bull pennant flag right here on Ethereum. If we break to the upside, that could suggest one more leg higher here. If we do get that, then I'd be looking at some resistance right around 18,075 or so. Or if we see a breakdown below about 1525 in the Ethereum price action, then that would probably suggest that a local tops in on the Ethereum price action will probably get a bit of a correction from here. And then jumping over the S&P 500, so S&P had a pretty major development this week. A lot of people in financial Twitter and across CNBC and all the other places where the financial talking heads are at, a lot of this trend lines have been discussed quite a bit. There's been a few variations as far as how these lines were drawn. A lot of times when you have these angled lines, you do get some different interpretations, but it's pretty undebatable now. After Friday's close, we clearly broke it out of this down channel trend line, which has been in place since the beginning of 2022, and so I think that's a somewhat significant development, especially if we can ultimately see it hold support now and not break down back into this channel. This could certainly just be a fake out and a reversal that we're going to go into next week. And so that's what I'll be keeping my eye on. As long as we're sitting above 385 to 390 in the SPY, I think we can stay constructively bullish in the S&P 500. But if we see price action drop below that 385 to 390 level, then I think this is likely just a bit of a fake out breakout rally, and will likely be falling apart from there. But as long as we can stay above that 385 to 390 level, I think there's a chance that we continue to rally going forward in the S&P 500. And it looks to me like there's a decent chance that this rally has additional legs, that we could see a pretty surprising move to the upside. This looks like a clear wave 5 up on an Elliott wave pattern, and then we've got a wave 2 correction down here, put in a pretty clear bottom, and now we're starting to see some price action move up. Now this does look like a smaller potential wave 5 that has materialized, so that's that and the fact that we got an FOMC meeting coming up next week leads me to believe we might have a little bit of volatility and some choppy price action, maybe a bit of a correction in the markets during that period. But as long as we do hold that 385 to 390, I think there's a strong chance that we can rally off those levels and ultimately head higher in the markets in the short term. A lot of people, I think, are either predicting that the recession's not going to happen because we're getting bullish price action potentially. I'm in the camp that I think we can actually have a bullish start to the year and still have a pretty horrible end of the year. And that's still kind of my thesis, is that we'll ultimately have a good chance of some positive price action to the upside to start this year and continuing on going forward. But at some point, we're going to likely see a pretty big meltdown, and I think that'll most likely occur in the second quarter or the third quarter of this year. Jumping over the triple Qs, we can see the triple Qs had a breakout as well, and we're sitting at about 296 closing the week out on triple Qs. We also got above the 200-day moving average, which is the first time we've done that on the NASDAQ since March of 2022, so that's a pretty significant development that we haven't seen in about 10 months or so now. So the big question is, can we hold that as support and continue the rally higher? If we do have this anchored VWAP to contend with at about 310 on the NASDAQ, which would likely be the next kind of upside potential area of resistance. And then we also have this Fibonacci extension level of the upside at about 317. But ultimately, if the S&P rolls over next week going in the FOMC, there's also a decent chance that we'll see a bit of a rollover in the NASDAQ as well. But as long as we keep that price action, I think above 282 or so on the triple Qs, I think we can still stay constructively bullish in the NASDAQ, and hope that if we do get a correction going into next week, that'll be fairly brief and we'll likely head higher after that. And then take a look at our DIA, the Dow Jones Industrial Average. We can see that we're in a bit of a bull pennant right now, and we did get up against resistance once again on Friday, and it sold off from there a bit. So that would also potentially support the idea that we might see a bit of a correction, however somewhat brief, in the Dow going into next week with the Fed meeting coming up. And so if we do stay within this bull pennant, that's probably only about a 1 to 2% decline in the Dow, and ultimately how we resolve off of the Dow pennant formation, I think, will ultimately tell us kind of where we're headed from here. If we see a breakdown below these levels, then I think we've got to be short-term bearish in the Dow Jones Industrial Average. But if we do ultimately see a resolution to the upside, which is how these types of patterns typically occur, then that would certainly be a bullish sign for the markets. And then the Dow Jones Transportation Index, we'd also like to see, if we do see that Dow breakout to the upside, we'd also like to see the Dow Jones Transportation Index follow as well to confirm that move. And if we see the transports get above about 14,785 or so, then I think that would be a pretty bullish price action for the transports as well, and also confirm that move in the Dow. And then when we take a look at our Russell 3000, this has been a chart we've been discussing all of 2022. Big reason for that is we've had just like in the S&P 500, we had a very consistent down channel trend line that we could essentially trade off of, and these lines were very valuable and kind of important information for all of 2022, as we did really kind of trade around in these ranges. However, we did get finally above and broke out to the upside in this down channel trend line, as well as getting above the 50-week moving average in the Russell 3000. So I think both of those are pretty significant moves to the upside. And so the big question is, does this fake out? Do we ultimately drop back down below those levels next week? Or if we hold that as support, then we'll likely see a further rally in the Russell 3000. And then we jump over to our large caps, our Russell 1000. Similar price developments here. We do have this descending wedge that we've now broke out of, as well as getting above that 50-week moving average, really going throughout all of 2022. Every time we got to that descending wedge, as well as the 50-week, that was ultimately where we rolled over from here. So seeing large caps break out above that for the first time since the beginning of the decline in late 2021, early 2022, that's a pretty, I think, significant development. And if we see follow through on that next week, then that'll be, I think, pretty pretty impressive for the large caps and signify that we'll likely see some more bullish price action out of our large caps. And then jumping over to our small caps, a lot more progression here. We actually broke out of our descending wedge pattern back in January. On January 12th, we had that price action break to the upside, and we had this anchored VWAP to contend with. We kind of chopped around above and below that a little bit, but we've now, finishing off the week, came down and retested that as support on Thursday, and then ultimately hit it higher on Friday. So pretty constructive looking chart for small caps. As long as I think we stay above that anchored VWAP line at about 186.50, then I think there's definitely reason to be bullish on the small caps. But we do want to keep a close eye on next week's price action, as there is a chance that we'll have some volatility and potentially come down and retest those levels. But if we see that 186 or so hold as support, then that would definitely be pretty bullish for small caps going forward. And then take a look at our growth versus value chart. We talked about in previous videos how every time we saw a significant rally that really developed into some tradable upside each time in 2022, we ultimately saw growth start to outperform value, and we had that twice in 2022 where that created the two best rallies that we had to go long off of. Well, we've seen that development once again, where growth is now starting to outperform value, and we've got 2 solid weeks of growth outperforming value now. And so again, there's, I think, a decent chance that next week there might be a bit of volatility, so maybe we come back down and potentially retest that trend line. But as long as this trend line's in place or we continue to see growth outperform value, I think that's another signal that there's a decent chance this rally could have some legs, and we'll likely have some further upside going forward. But I think we do need to be cautious going into that FOMC coming up next week. And then jumping over to our sectors that we track, this is for the last trading week ending January 27th. So we can see at the top of this list we had ARC FinTech as at the top of the leaderboard, up 11%. ARC Innovation also up almost 11%. We saw some big moves out of self-driving and technology sector, up over 9%. Lithium had a great week, up almost 9%, as well as cloud computing, both of them up almost 9%. Also saw some strong performance out of online retail, ARC Tech and Robotics. We saw some great performance out of our auto index fund, consumer discretionary. So a lot of sectors in the green on the week. As we scroll down here, we can see most of the sectors had a positive development on the week, and it was a pretty good week in the markets broadly. But we did start to see a little bit of weakness out of the gold stocks. They kind of were mostly flat on the week. And then we also are still seeing nat gas at the bottom once again, down over 4%. However, it does look to me like natural gas is really close to putting in the bottom. We actually had 2 positive days to close the week out on natural gas, and it was at a pretty solid technical level with some big oversold readings. So also some time to mark 13s on the United States Natural Gas Fund, suggesting potential counter trend move. So it's getting really close, I think, for a potential long position natural gas, as it's just been beaten up really tough all of January, and a lot of that had to do with the warmer weather that we've had globally. But I think the natural gas is so oversold, there's going to be a really good trade here, potentially even as soon as next week, but we're keeping a close eye on that price action. And then jumping over our oil chart, so the U.S. oil had a bit of a rally over the last couple of weeks, but it sold off. It got up to that 21-week EMA and ultimately rolled over from there. And so we're watching those levels really closely. Last week we talked about if we were expecting oil to really kind of take off to the upside, we want to see it get up above that moving average, and then also get above that $85 price action as well. And so if we see that happen, then I think we have to get a lot more bullish on oil prices and probably the energy sector abroad as well. But we still have not reached that level, and we can see in the past that when we've reached this yellow line, that's ultimately been a area where we've kind of rolled over from here. So we'll see next week if we actually see price action break down from here and head lower. If we do, still looking at that 200-week moving average as a key area of support, which currently would be about $65, $66 a barrel. If we do hit that level, then I think that would be a very strong floor on the price action of oil, and at that point it would be a really good opportunity to likely go long energy stocks and oil prices. But we need to kind of see how that price action develops. We might ultimately just continue to see kind of some sideways price action between where we bottomed out previously at about 70, and we seem to not be able to get above that $85 level. So maybe we'll just see some sideways price action in oil between 70 and 85 for a bit. But I really would be surprised if we ultimately saw it break down below that 200 week at that 65, 66 level. And then jumping over to our CRB index, the commodity space, kind of a flat week on commodities. We had 2 strong weeks previously to the upside, or 1 really strong week and then a decent upside week after that. Kind of hit a level which has been acting as resistance for quite a few weeks now, and ultimately saw commodities sell off a bit as we kind of reach these levels. So big question will be whether we ultimately sell off and retest that 267 level again, or if we can actually kind of get out of this sideways price action, potentially break up to the upside. But we really haven't been up above this 279 or so on the CRB since looks like it was back in November, middle of November of last year, last time we had price action above that. So for now, it looks like we're chopping around sideways between about 264 and about 280 or so on the CRB index. Then jumping over to our VEU index, this is our global markets minus the United States. So we're up against a key area resistance at the 54.86 level. We literally just hit that, broke above it just a touch to close the week out, but ultimately closed the week right at that level. So potentially that could be an area of strong resistance as it has been in the past, and maybe we roll over from here going into next week. I think if we have some volatility in the U.S. markets, it wouldn't be surprising to see that develop in global markets as well. But if we do get price action close above that 54.86 and see that weekly close above those levels, then that could set us up for a bigger move to the upside at about the 59 level on the VEU. Or if we do see a breakdown on that level, we'll watch it closely to see if it can hold support at that 200-week moving average. And if it breaks down below there, then we'll be watching this 52.20 level closely on the VEU. And then taking a look at our emerging markets divided by the S&P 500, we can see that emerging markets have started to catch a bid, and on relative terms compared to the S&P 500, they've actually been outperforming the U.S. markets since about late November, or I guess maybe early to mid-November actually. And so as long as this trend line's in place and we're continuing to see emerging markets move up relative to the S&P 500, I think that's telling us that there are some opportunities in emerging markets and global markets broadly. And it's no surprise that when this chart started moving up into the right, coincided pretty tightly with the dollar starting to show some weakness. And so as long as the dollar is not rallying, I think that is going to continue to set us up for some potential bullish price action in the emerging market space. But if we start to see the dollar roll over to the upside, as it's been kind of declining for a bit of time now, if we do see a dollar start to bounce and move to the upside, then I think that would be a time to take profits on your emerging market stocks if you're in. Jumping over to the HYG, the Highly Corporate Bond Index, this is a key indicator that watch closely for kind of broad market health. We talked about breaking out of this descending trend line here as a bullish price action, and that obviously developed a few weeks ago, and then we've been able to stay above that 75 level, which is a key area of support. However, we haven't got above this 50-week moving average yet, and that's ultimately acted as resistance now 3 different weeks. So I think if we're looking for further bullish price action on the HYG, we'd be looking for a breakout above that 50-week moving average, and if we get that, then that would probably signify some further upside price action in the broader markets as well. If we see 75 break down and we see the HYG break down below that 75 level, then I think that'd be a warning sign that potentially markets are in some trouble. So key area of support and resistance on the HYG that I'm watching closely. Get above that 50 week, I think that's very bullish. We get below 75, I think that's a bearish warning. Then jumping over to precious metals, taking a look at GLD. As we can kind of see, it's been fairly flat on the week. We've had some up and down days on gold, but ultimately pretty much a flat week in the precious metal space. So our question is, are we putting in a bit of a top now, and are we going to roll over from here for a bit of a correction, or is this just a bit of a pause before we ultimately see the next leg higher? We did see it hold support pretty nicely against this 179 level for most of the week, and so if we can stay above that level, then I think that's pretty bullish for price action. And ultimately, as long as we're still above our moving averages here, then I think there's reason to stay constructively bullish there, and I'm definitely very bullish in the precious metal space kind of longer term for 2023. But we do need to keep a close eye on that price action, as I like to swing trade these things, so I'm not really trying to stay into precious metals if we're going to ultimately get any kind of a deep correction. And so watching kind of how we hold up on these levels, I think will be pretty key. we see a big breakdown on gold, then it'll probably be time to take those profits if you've been in them and kind of look for that correction before we re-enter some longs. But we'll just need to keep a close eye on that price action going into next week and see if it's just consolidating a bit before the next leg higher, or if we ultimately putting in a short-term top and then correcting. Jumping over to the silver chart. So silver's also been kind of consolidating. There's been a little bit more volatility in silver. We've been bouncing around between about 21 and about 22.50 on the SLV chart. And so big question is, just like with gold, are we just consolidating a bit before a big breakout to the upside, or is this ultimately a short-term top and we're going to see a decent little correction? If we do get that correction, we'd be looking for some sort of Fibonacci retracement levels, which would potentially be anywhere between about 20 to about 1875 or so on the SLV. And if we do get that correction down to those levels, then I'll definitely be looking for support at one of those key Fibonacci levels. And if we find that support, then I think that'll be a great time to re-enter some longs. Also, if we don't see that breakdown and we see this tight consolidation pattern hold up and then ultimately a breakout to the upside, then I'm also going to be going long as well, because if we can see a breakout above that 2250 level on SLV, then that would be a bullish development for our silver prices. Jumping over to our interest rates, so our 2-year interest rate closed the week out at 4.2%. Mostly sideways price action on the 2-year rates for most of the week, and it looks like a couple of weeks now we've been chopping around sideways there on our 2-year. And then jumping over our 10-year, we did see a little bit of a move to the upside on our 10-year interest rates, but we're ultimately sitting at that 3.5 level. As long as we can stay in this channel to the downside, then I think we can still be looking for some bond plays. However, it does look like, at least in the short term, there might be a little bit of upside momentum in the 10-year rates, and potentially maybe we get back up to this top channel before we ultimately head lower from here. So keeping a close eye on this 10-year chart and this channel here to the downside. As long as we can maintain that, then I think we're going to continue to have some great bond trades developing. Already got one really nice bond trade in January, but I closed that out probably about a week ago. And so kind of watching this price action closely, and if we start to see the 10-year drop again, then I think that'll set us up for the next leg higher in some of our bond trades. Then jumping over the 30-year, similar pattern here. We kind of have this down channel trend line to kind of keep a close eye on, and as long as we stay below that, then I think we can stay constructively bullish on bonds as well. So we've got some key trend lines that I'm watching on some of the key interest rate levels to keep a strong look on where bonds are likely heading from here, and I'm really using these charts to kind of set up my bond trades. Jumping to the put call ratio, so we had a huge spike the week previous. We seem to have still a lot of bearish concern in the market, and every time we do get a bit of a dip, then this PC put call ratio ultimately just spikes to the upside. And with this last week, we had a brief spike above 1, which is elevated put buying production, but then it didn't stay up there long, and we ultimately closed the week out at extremely low levels. Lower levels than we've been at for quite some time. Last time we were at these levels on our put call ratio, looks like the closest price point was back in late November. And so obviously we've had a lot of bullish price action recently in the markets, and so I think people are starting to be a little less paranoid about the potential downside risk, at least in the short term. And so as long as we do continue to see some decent price action, maybe we'll start seeing some put call ratios in more normalized ranges between this 0.5 and 1.0 range. And then jumping over the DXY chart, our dollar index has continued to decline, but these last couple of weeks we can see that we've been kind of going somewhat sideways. Currently sitting at about 102 on the DXY. Still looking for a potential bottoming process right around the 100.5 level. If we zoom out here, we can see that this 100.5 level was a key area of resistance about 3-4 different times, and now we're getting up against that level from the upside, and so we're going to see if that'll ultimately act as a support floor for the dollar. If we see the dollar break down below that 100.5 level, then I think that's a good sign for precious metals, for the markets broadly as well. So we're watching that 100.5 level really close on the DXY to see how price action develops from there. And then jumping over to our yield curves, so still quite a bit negative in the yield curves. However, the last couple of weeks, we've seen sideways to upward momentum back towards the zero line a little bit, but we're still extremely negative readings, almost negative 0.7 on the 10-2s, and we're over a negative 1 on the 10-year -3 months. So still extremely negative readings on our yield curve, and still, I think, giving us big flashing warning caution signs for later in the year. That I think there's still a great chance that we get a bit of a rally to start the year off. However, I think there's also a really strong possibility that we have pretty deep pain in the markets later on in the year. Jumping over to the VIX. VIX has also been at some of the lowest levels it's been at for some time. The last time we were hitting an 18 reading on the VIX was going all the way back to early January. So really all of 2022 we never really touched that 18 level. We've kind of double bottomed on that 18 level twice now. So the big question is this double bottom kind of support? And then do we ultimately break out next week on the volatility index? With the FOMC meeting coming up, I think there's a decent probability that could happen. But as long as we stay below 25, I don't think we need to completely panic. I think if we see a big shoot up above 25 on the VIX, then that would be a little bit more worrisome as far as potential market breakdown. But it wouldn't surprise me at all if we potentially bump back up above 20 next week with the FOMC coming up. So let's go and close it out this week with a trade setup opportunity. We got Cleveland Cliffs as a stock that I'm in right now. We had a nice breakout on Cleveland Cliffs. We had this descending wedge pattern that we broke out of back in late November. Ultimately kind of watched that price action develop to see how it was materializing. And we've now gotten up above that 200-week moving average, as well as this Fibonacci extension level at about 1963. So I think that 1963 level creates a really solid floor for support on this trade. And so as long as we're above that 1963 level, which we've actually, after we broke out above it, we already came back down and retested it, held that as support, and now we're heading higher. So that's a pretty short-term, constructively bullish price action we're seeing there. And I think there's a decent setup here where we could ultimately see Cleveland Cliffs head higher from here, as long as we're above that 1963, probably even a little bit lower, just in case you get a brief dip below that. I've got a stop loss down probably closer to about 19 or so on this one, but as long as we stay above that Fibonacci extension level with any of our price action daily closes, then I'm staying long on this one, looking for at least an upside target of that 2650 level, and potentially getting back up to this $30 level on Cleveland Cliffs. So those are the two upside targets that I'm watching closely for that trade. So thanks for tuning in this week. Make sure to download the ToroAlerts app on the App Store. We've got one for stocks and one for crypto, and you can check us out at ToroAlerts.com. We'll see you next time.